we're definitely in a situation of much higher risk than we were last month. But we have seen similar-ish situations before, and that's kind of the risk premium we saw. I do think that it does depend a lot on what happens in the Persian Gulf, other countries' reactions to it, and also, but it does seem that Iran is continues to have the ability to export oil, and that's really what matters for oil prices, whether or not these supplies are disrupted. If they're not, then really it's just a risk premium. It's going to go up and down. I wouldn't be surprised if we see insurance rates for tankers go up, and that can also impact prices as well. But at the same time, it's just I think we're kind of in the range of maybe $3-4
The
a barrel.
Straits of Hormuz, that's never been closed down in the past. Is the market, as far as you can tell, when you talk to people in the industry, are they believe that is still going to be the case? That's still going to be, you're able to get your oil in and out of the strait?
Yeah, I think what's going on is people are very jittery, and it's every time there's any kind of military action in the Persian Gulf, that's kind of the worst case scenario that everyone jumps to, and I think a lot of that is a holdover from the '73 oil shocks, where oil was embargoed, and also from the Iran-Iraq war, where there was this tanker war, and essentially the U.S. military had to escort oil tankers out of the Persian Gulf to ensure their safety. I don't think that we have the same dynamic now because, first of all, China is a really big player. China is basically the largest customer. Asia is now the largest customer for these Persian Gulf producers. That includes Iran and Saudi Arabia and other ones. And you don't want to kick the nest when it comes to China. China is not going to like it if their ships are disrupted, if their access to oil is disrupted. And so they will put economic pressure to cool things down and to make sure that their economic needs and desires are protected there. So I think that's a new factor now that we haven't seen, that we didn't see in previous years. There's also a matter of, can they physically actually close the Straits of Hormuz? I would argue that it's not as easy as it seems, or as they say. They can definitely threaten ships, which can also be pretty bad, but you can't actually close it. Iran's not the only country that has ownership over the waters there, and you can actually reroute ships into Emirati and Omani waters. It would take some time, and during that logistical, inter period, it would be we'd see higher oil prices, but I do believe it would work itself out in the end.
And there are some spare pipeline capacity through Saudi Arabia and the UAE to bypass the strait, but it is still relatively limited. Do we have a good sense as to whether Israel truly wants to strike oil and gas facilities? I mean, I know over the weekend we did see some of that, but nothing that truly disrupted production.
Right. And I think that's interesting. I think they're really walking a very close line because all of the facilities that they hit two gas processing plants in the South Pars gas field. They hit a fuel depot outside of Tehran, and they hit an oil refinery. And those all have domestic impacts because Iran doesn't export its natural gas. It uses it only for, electricity domestically. Iran has to make all of its own gasoline, et cetera. So you can see that their strikes are designed for maximum domestic effect, and that they have not touched Kharg Island, which is where the 90% of Iran's exports are loaded into tankers, and they haven't touched anything that would impact Iran's exports. Now, the question is, how long can they not touch them, either by accident or because the exports are a primary source of Iran's funding? And at a certain point, you got to go after their funding. And so I think that right now it's not on the table, but if there isn't any kind of resolution to this, I wouldn't be surprised to see them at least threaten it diplomatically or someone down the road.
Ellen, aside from the geopolitical risk there, what is underlying demand? What are the assumptions for underlying demand for the rest of the year for oil and gas?
It's a good question. I think we're in a pretty good demand situation. I do think, everyone's a little bit nervous about whether or not there might be a recession or not. In that case, demand could go down, but otherwise, demand seems pretty stable. I think there can be some variation depending on what happens in China or India. But in general, demand's pretty stable. Supply looks good as well. I don't think we're not in an oversupplied situation at this point, or like not a massive oversupply situation. But likewise, we're not undersupplied either. And so I think prices seem to be pretty good for where they are. And I don't think, unless, I don't think that this issue in the Middle East, provided that it remains within kind of the confines where Iranian oil exports aren't hurt and Iran doesn't try to obstruct any other oil exports, that I don't see that we shouldn't really hit $100 a barrel, for example, because of this. I think that that's not realistic.
So different than what we would have seen 10 years ago, 15 years ago. Ellen, before we let you go, what are the Saudis doing right now? How are they involved or not in these discussions?
The Saudis are probably involved. I wouldn't be surprised if they're talking to Russia, because they're very keen. They'd love to be, help broker some sort of a deal here. They are privately very happy that Israel attacked Iran's nuclear facilities. They don't want Iran having a nuclear weapon either, but they're not going to say that out loud. In private, in public, they are condemning Israel's attacks. But basically, I'd say they're focused on keeping their oil supplies, going, and kind of to have a low profile.